Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An immediate countering bullish harami yesterday after the previous session's bearish engulfing pattern. What was interesting was the length of the day's action, as well as the long tail, which defined the free area between the overhead 50% Fibonacci line of the January 2021 to September 22 move at 109.44 and the congestion below, made up from the combination of the flatlining short-medium moving average, currently 107.40, and the April 2020 low at 107.25, and even the trend lines below that from the old September to November 22 ascending wedge pattern. Going back to the resistance overhead at 109.44, this capped the market last week and topped the market back at the very start of February. Looking beyond that, the next levels to watch out for are the flat July 2017 to November 2018 head and shoulders neckline, currently 111.07, and the congestion from March 2020 centered around the 111.39 area. So far today, well, initially nothing much, looking like an indecisive doji cross, but we're now seeing an attempt up at that 50% Fibonacci overhead at 109.44, the resistance level there. Cable, aka sterling against the US dollar. A third countering key reversal up, if only just, but also more importantly perhaps a bullish engulfing pattern yesterday. It was also the highest close this year. I'll be retiring target X at 123.75 after this commentary. This was the primary target for the February to early March descending wedge pattern, which was achieved last Friday. We still have the secondary, harder to reach target X1 higher up in the 125.90 area. All this is an immediate, if modest, follow-on higher to the monthly key reversal up made in March. In truth, we have seemingly little above until target X1, bar the congestion evident around the 124 even area, though this may extend up as far as about 124.5. It will all depend if we can make some consecutive high closes over the next few sessions. Meanwhile, below we have as the first level of support the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16 with the June 2020 low at 124.48 thereafter. So far today, well, a significant attempt higher, as it's a really significant one, with the highest high since June 2022. Perhaps target X1 at 125.90 does not seem that far away now. Euro sterling. A second bearish black crow yesterday and a follow-on higher to the bearish engulfing pattern seen on Friday. Prices closed at the flatlining medium moving average, currently 87.80 with the lowest low for nearly 2 weeks. The market seems to be considering whether to stay in between the August 2022 to date uptrend below, that's currently at 87.48, and the overhead recent downtrend, currently at 88.78. Now, for clarity's sake, they are not forming a sideways triangle because, frankly, they're not good enough, not yet. But I'm also mindful of the overhead 50% Fibonacci line of the March 2020 to March 22 move at 88.51. And so far today, a significant move down below the medium moving average and a test of that important uptrend. Below this uptrend, we have the April 21 high at 87.19 and the flatlining long moving average, currently 86.95. US dollar against the Indian rupee. Bearish, if higher, black crow yesterday that closed right on the medium moving average, currently 82.19. More importantly, it was day 2 in a 2-day meeting lines pattern, the variety of which exhibited here is traditionally seen as bearish. Below, we now have the optimized lower trend line in dark blue, currently at 82.12, of the 2023 proposed ascending triangle pattern, and the August 22 to date uptrend, currently at 81.99. That prompted actually my drawing in part of the ascending triangle pattern in the first place. Meanwhile, overhead, we have the upper time, currently at 82.75, highlighted in dark green on my daily chart, and that's of the October 2022 to early January this year bearish shift pitchfork, and the upper trend line, currently 82.97, of the sideways triangle in dark blue. This sideways triangle is the current dominant pattern here, but I suspect we are actually coming to a cusp on it. So far today, a slightly higher open, but then a test down to the lower trend line of the ascending triangle. So far, it is holding, but I'm also mindful of the significant chances of a false break here as well. US dollar against the Brazilian real. A lower, or maybe I should say lower-ish, yet still indecisive doji cross yesterday. The market dipped below the 61.8% Fibonacci line at 505.73, but ended up closing above it, if only just. Prices are now approximately midway between the upper time, currently at 519.17, and the middle time, currently at 496.15, of the broken late July to late September 2022 bearish shift pitchfork. This pitchfork is highlighted in dark blue on my daily chart. Now, despite being broken, this pitchfork is still influential, though I'm minded to look more towards another pattern that was created by this very same pitchfork, and that is November 22 to date, a bear channel, currently 488.78 to 538.37, which is highlighted in bright red on my daily chart. These were complementary to each other, with, as I had pointed out, one giving birth to the other. But I'm minded to think the bear channel is actually becoming the more dominant pattern right now. But then over all of this is still the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. An interesting and reactionary outside day yesterday. There was also a bullish piercing line pattern. We're still well within the breached, arguably broken bear channel, currently at 1786.91 to 1902.01, that has repaired itself and is highlighted in dark blue on my daily chart. We're actually quite close to testing the lower bear channel line. We also still have two other significant features on my daily chart. Firstly, and close by, is the neckline, currently at 1790.06, and highlighted in purple on my daily chart, of this February to April 2021 head and shoulders top. This has acted as the latest roadblock in this market's journey heading south. Meanwhile, above we have the neckline in bright green, currently at 1857.10 of the January to May 2021 head and shoulders top. This neckline had been important back in February when it was getting tested, but has since diminished after the subsequent move lower. But it's still there, and recently has had the declining short medium moving average, currently at 1851.46 as company. Now, so far today, an attempt higher, which was beaten back into the main body of yesterday's range. Watch out for that congestion well within and below. That's between 1810 even to 1793.5, created by the combination of the lower bear channel line and the purple neckline back at the beginning of March.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.